re-upload this so it's audio. Okay, this is the volume over time indicator. So let's go over really quickly what it is. Step 1, how does this indicator work? This is an indicator that I consider a periodicity indicator. And the reason is because that this output here, this thing that you're looking at, is the output of an entire data set without time. So we're used to sequential indicators. It's like these create this moving average data point, and then you scoot forward a little bit, and all that data creates this, and so on. And so it's like running over time. Well, this works in sort of a period of time, and it takes all the data in that period and outputs some organization of it, like a volume profile indicator. And this does exactly that. So if this moves down, it's going to alter every single point on this. If it moved way up, everything gets altered. It's attempting to organize all the data into an output that's sort of useful. So you can't think of this as time 0 and this as the current time. No, this is the high of the day, and this right here is the low, and this is all the prices in between. That's how it's working. And so that's what you're looking at, is the volume. So we're taking all the volume, which it could be something like this, and then all the time, and then subtracting them, and this is the output of that difference. The purpose here is to simplify and make it really clear. There's been some clarity issues that I've constantly found with things that, especially volume profile indicators. And this is really simple. What exactly, if you have a volume profile that looks like this, right? Like this is your volume profile. What does that mean? Is that up or is that down? Is that a range? What does that mean? And the answer is it means exactly nothing. Nobody knows. It just shows you where the volume is sitting, and it's highly contextual and ends up being quite subjective. So my goal was to sort of say, can we get away from that subjectivity that every volume profile analyst will tell you isn't there? They're like, no, it's very clear, and I disagree. Was to create something that cuts back on maybe some of the raw data and gives you a little bit of clarity. And I ended up just coming up with something that I really, really, really liked. So what we're seeing here is that at these prices, right? So, or here, look at this one right here. That price, this price level, this is the difference between volume and time. That's what that is. So is there volume there? Well, of course there's volume there, but from this calculation, there was more time. In other words, you had slow volume. And markets like fast volume. They want it all, and they want it all right now because they're commission-based. So what the market does is it hunts for orders. It hunts and hunts and hunts because it wants those orders quick. So there's some quick orders here, quick orders here. I'm taking out the speed aspect, and I'm just saying there was more volume than time. And you could say to yourself, oh, okay, so there was volume there. It's not like there wasn't, but it took a long time to find that volume. And the market's looking for fast volume, or volume, that happens quickly. Maybe it's sitting on the order book. I don't know. But you could see that when you have volume at higher prices like this here, so this price area, and then you have a whole bunch of time down here, the market goes, well, I don't want to go down there. It's going to take forever to find the volume. I want to go up here and look for more of this, the nice, quick, give it to me now volume. And this arrow is averaging out all the volume. It's taking the average price. It's taking all the time, so there and there, and it's saying which one's higher. That's it. So it's saying on average, we have volume higher and time lower. So green arrow. So expect the market to hunt up higher. Here on this day where we had our nice, I'm going to quit printing stimulus Trump tweet, we had a green arrow. It was looking, there was all this volume and there was time. and it was hunting and hunting and finding the volume higher and higher. The tweet brought it down, and it was able to find volume here. And then as soon as the market pushed lower, it couldn't find any more volume, see? And then it went, well, let's go back to what we were doing before the Trump tweet. So it started to lean up, and it finally started to find some volume, and is continuing to hunt higher. And you could see today even there wasn't, it just couldn't find any volume down there. So it's hunting higher and higher and higher and higher, and it's looking for volume. So think of this like a volume profile indicator because it's going to develop just like one. But thinkorswim restricts the way that you can plot. I can't make horizontal volume profile manually. I can't do that calculation. So I plot it like this. So this is all the prices and the value at each one. Now, there's a few things that I look for. I look for one, the arrow, which where's all the volume? Is it higher or is it lower? Which is green arrow, higher, red arrow, lower. The other thing is I'll look for areas. So here was a spot, which I went over this just a minute ago. Sorry, it was quiet. This section here, you could see wasn't able to find volume in that area. The tweet brought the market down to test that area. While everyone was excited and the algorithms were firing off, there was volume there. And then as soon as the market reopened, the volume in this area vanished. So the market went right back to what it was doing before. So it was the excitement that found all that volume. I wouldn't call that hunting. I wouldn't call it natural volume. I would think of it as as a news bar that brought things down. And so a bunch of orders got hit. But as soon as the excitement vanished or wore off, went right back to not being able to find any volume anywhere in that section and went back to what it was doing. So the advantage of this indicator is not that it's giving you high resolution or it's something you could scalp. It's clarity. It's nice and clean and clear. That's the whole point. It's to say I can see where the volume is. It's nice and easy. It's straightforward. These mark out areas where there was higher amounts of one or the other. They happen on both sides. Let's see, there's one for volume. Here's one. So there was more volume here, or a lot of volume. Sort of it's a deviation type thing. It was a lot of volume there, and there was a lot of time here. The things that I look for are those. That tells you there's a bunch of one or the other. Originally, the thing that I was really paying attention to was the places where it crosses over. This suggests that it was sort of neutral one way or the other. I haven't really been paying attention to those as much as I've watched this over the last week or so. The thing that matters to me is where's the market going to hunt next? Or if we get a knee-jerk reaction, where did the market go to? And then I can look and say, how was there a bunch of volume there? Wasn't there? What are we going to be looking at? And it sort of just gives you a really clean structure, the thing that you wish you were getting at a volume profile, but you can't because volume profile is so subjective. The only thing I like about volume profile is low volume nodes where there's no volume. It's like that. That's the only thing I've ever really found consistently useful about it. Everything else changes based on conditions. So, as long as you're keeping up with it, it's useful. But if you're just going to not watch markets for a while and have no idea what's going on and pull up a volume profile, you're going to be lost. So they're very contextual. This, you should be able to not pay attention to markets forever, come back, you look at it. It's pretty straightforward. It's clear what's happening here. So if you go over and you pop open this chart, you could see I only have so much space to jam charts onto this. So this is what we got. So you could see that we get the signals, and this is meant to be a little bit longer term data that, these update a little slower. They're intended to be like a day-to-day, not something that you're trying to scalp off of. You shouldn't be doing that kind of stuff. This is just to help you see where the market's positioned, which direction are we moving, how do the market internals, their tension, stuff like that. And now we're going to get a look at the volume at price for the ES. So these should all help you sort of model out which direction the market's moving and what the landscape looks like moving forward. So I thought that fit a lot better than the VultiWap, where the VultiWap is a little bit faster and it's an intraday almost scalping indicator. So I swapped it out for that. Hopefully it's a good choice. I'm still building this. I'm still developing the ideas, but I was looking through it and it's just really hard not to notice that it does a good job of showing you where markets are going to continue to hunt. It doesn't tell you anything about trends. So if you come in here with the attitude that you see a couple of green arrows, that this is bullish, you're misinterpreting it. What you should be interpreting is that, a green arrow here means that the market is just naturally going to look higher. It doesn't mean it's going to trend higher. It's going to look up there for volume. That's what it's telling you. If, we see this red one, does that mean it's trending? No, it means it's going to look down, and it did. It looked down a little lower, didn't find any, and then went the other way. So it doesn't really talk about trends. So if you come in looking for a trend indicator on the volume over time indicator, I think you're going to be misinterpreting what this is telling you. It's a very simple suggestion. Markets tend to go to where quick, easy volume is, and they tend to shy away from places where it's difficult to find orders to fill and collect commissions on. And I think that is a reasonable expectation if you built a market and your major income is commissions, to say, well, of course you built in a calculation to help improve your bottom line. And that's sort of the thing I'm trying to play off of here or pick up on. So this number, this right here, can change throughout the day. At the end of the day, all of this is set in stone. So once the day closes, it's all set. Nothing's going to change. This will develop through the day, just like a volume profile indicator. And then at the close, we get the signal really set in stone, and then you can use that. So really quick overview of just what this is, and it's supposed to be straightforward. Don't dig too much into it. Don't sit and stare at it and try and pick out nuances and stuff. I think that's too granular for this type of indicator, a volume profile style indicator. You got to look at it and say, there we go, we can see where the volume is. And then when you apply your other indicators to it and the other things you're doing, you can get an idea of the tendency of the market, the tendency to go towards more volume and away from less volume. And then just keep that in mind as you're doing it. So throughout the day, as long as there's no major changes or big events like this, the market, I've found pretty consistently, just sort of goes to where orders are. It just goes wherever it can find them and just keeps going that way until it runs into problems. Oh, so one thing to pay attention to here, and this was one thing that I noticed. Here's an example of it right here. So you could see the market moving down. We ended up with a red arrow. And look at this. Look at all this time. So I've noticed that finding a ton of time is one good indication that the market might go the other way and have some stall potential. Doesn't always happen, but here's another day with lots of time. The one example that I really liked was this one, where it's very clearly there's more volume at the lows than the highs. There's just so much time throughout the day that you have this stall potential. I think that's why it didn't come down. It's just the day just didn't have a lot of volume in it. So that's something I've been paying attention to. And today is one of those examples where we just have a lot of time just right now in there. It's not something that I'm going to say, okay, take profits because of that. If you're long, dump it. It's something to say, today had a lot of time. So just keep that in mind. I don't have a real clear explanation for exactly how to interpret these things. I'm still working with it. I know how it was coded. I know what the data is. So I'm going to be expected to come up with interpretations of this. And I'm trying to do things that are very clear and they'll be consistent over time. But just remember, this is just telling you there's lots of time in the day, but there's more volume at the highs. So something to pay attention to. Take notes, watch it. You may find things that are interesting or useful about this indicator that I haven't noticed. I find that pretty consistent. A lot of people will find things that I missed. Let me know. If I can code things in and they're simple enough, I may do so. So hopefully that's a good overview of how to use this indicator. It's supposed to be simple, supposed to be clear, straightforward. It's built like a volume profile indicator, so expect it to update itself like a volume profile indicator. Yeah, and if you guys have questions, shoot me messages and I'll try to answer them and stuff like that. Good luck trading, guys.